So
Right.
those were the biggest things that like we know could go wrong in funding is if I fund a transaction that's fraud, bad,
Right.
something that that merchant should not really be, because once it's in their bank account, they can spend it just as fast as I put it. Like I can't yank it back any faster than
Right.
they can spend it.
Hey everybody, James Shepard here with another edition of the Merchant Sales Podcast. Today, interviewing Kyle Morgan, a good friend of mine, been on the podcast several times. This is a podcast for those of you that really want to understand the payments industry. You want to understand how to get your merchants paid faster, why it costs money to get your merchants paid faster. Also, if you are a retail ISO and you're thinking about becoming a wholesale ISO, and you're like, well, how does that work? And I want to take over the flow of funds. Like I want to be the one that pays the money to, deposits the money in my merchant's bank account, right? How do you do that? It's like, well, you're going to find out about that today. What is a payfac, right? How does a payfac work and how is that different from a wholesale ISO? We're going to talk about that today. So lots of things today that we are going to be talking about. Very much a in the weeds payments podcast. So if you want to understand how payments works behind the scenes, this is the podcast for you. And then continuing with that, we have Patti Murphy with Today in Payments, just giving a lot of quick updates on things that are happening at some of the largest companies in the world and how they're approaching payments, and how some of those approaches are working and not working. And so we're going to dive into that today. This podcast is brought to you by Nativia. If you want to learn more about Nativia, head over to nativia.com/CC Sales Pro. So nativia.com/CC Sales Pro. They have a variety of fantastic programs, especially if you are a smaller to medium-sized ISO looking to grow, looking to scale. Nativia is an incredible partner to have. I'm working with them at Full Stack Payments. A great partnership to have. They're helping you, get the capital that you need to grow, the solutions that you need to grow. And so we'll be talking a lot more about that in the coming episodes. But again, nativia.com/CC Sales Pro. Go check that out. With that being said, let's dive into this week's episode. Hey everybody, I'm here today with my good friend Kyle Morgan, who's the CEO at Mercantile Processing. How you doing today, Kyle?
Oh, great, James. Thanks for having me on.
Absolutely. So you and I have covered quite a few in-depth payments topics over the years in the podcast. Today is no exception. We're going to dive into funding and talk a little about that. But before we do that, I think it would help our audience to get a little context. First of all, about what you do. Give us a little bit of context there for those who have missed earlier episodes. But most importantly, tell them about what you do and the fact that you're a wholesale ISO. So to give them a little context of how you would understand
Sure.
this topic, we're gonna discuss.
Yeah, great. Yeah, thanks. So yeah, great. Just intro about me. I've been in the industry, kind of our 20th year next year, so I've been doing this 19 years. Started the ISO as a college sophomore, terminal slinging, doing the sales, the good old days where everybody had a terminal before integrated payments, so started back in that time frame. Fast forward about 3 or 4 years, I got our first bank partner. So as an ISO, we were retail ISO then, registered, and basically worked with community banks in the Delaware, Maryland, Pennsylvania, Virginia region. Continue to grow the ISO largely based around that. Have done a little bit of software integration. I've done a little bit of international, but primarily community banking has been our backbone for our business. About 3 years ago, we jumped from retail to wholesale, which basically just means we're doing our own underwriting, we're doing our own risk, and we're doing our own funding. We're setting the funds every day. We're evaluating what goes out and what we hold and all those things. So, that's been our biggest, newest leap. The main reason we took the leap was, we have all these bank partners and, when they'd hold a big transaction, we had no say. When they would delay the funding, we had no say. And we have bank partners that can go, no, this is $1 million deposit relationship. Please release these funds. And now we
Right.
can. So that was the big driver for us. And so
Hmm.
along those last 3 years, we've learned a ton about how funding works, both from the acquiring side and from the car brand side and from the
Right.
risk side. So I figured it'd be a good conversation for us to have. So agents and ISOs
Yeah.
might understand better what cutoffs mean and why same day versus next day versus
Right.
2 day funding exists.
Right. So I was thinking maybe a place we could start this conversation, Kyle, would just be kind of a flow of a transaction, right? So I go into a store, I spend $100 and I use my Visa credit card, let's say.
Yep.
Um, and so that $100, help me understand the life cycle of this $100. How does it get from that card back into this merchant's bank account?
Yeah, that's a great, great starting point. Yeah, keep it simple. So $100 authorization. First thing you're gonna do is you're authorizing, so it's going to go out to the car brand, doesn't matter which one. Does James have $100 available? Yes or no? Yep, there's your approval. Great. As soon as you get the approval, it holds it on James's account. The terminal or the gateway hold it in authorization, and it says, "Great, we've authorized it. We're holding $100. Fine." Then it settles. Okay, so then the terminal settles or the gateway settles, and it submits a file to us, the processor, and then we kind of submit out that same file to all four card brands. You can think EBT and all stuff, additional, whatever, but out to
Right.
everybody. So then what happens from there? Say it's Visa, you know what I mean? So what's going to happen there is Visa is going to receive that file from us. As long as they receive it by midnight, the next day they're going to ACH me the $100. Actually, they wire it. They send it immediately. They wire it to me minus the interchange. So if that was a rewards card at 2.5, 2.25%, I'm going to get my 97.50 for your $100. But what had happened in that same time frame, so I'll get that wire from Visa around 11 o'clock. I've likely, if it's a retail merchant, I've already ACH'd the merchant at 8 a.m. So we actually are going into about a 3-hour overdraft every day, waiting for the wires from the card brands for the funds that we send out. Now, our sponsor bank is used to that, so they're fine with, a
Hmm.
huge negative account for 3 or 4 hours. But that's kind of that, we're funding it, assuming that Visa's going to wire me the money.
Hmm. Yeah, it's so interesting, right? I think it's interesting for people to kind of, for agents to understand that. I just think is really important, because a lot of times we'll think about, hey, we're setting up this merchant account, like let's just go, let's just set this thing up. Who cares?
Yeah.
You know, and they don't think about the risk component of that money. So let me ask you this question. So when you think about funding, what are the things that can go terribly wrong? What are the things that you're like, man, I'm a wholesale ISO. I am, and by the way, not every wholesale ISO control does the funding, right? So there are
Yeah.
different pieces of this, but in your case, you're taking control of this. What are the things that kind of keep you up at night, or at least initially you were like, man, we got to make sure we solve this?
Yeah. I think the biggest thing is, the risk was the scariest piece because, in our world, we set an account and say, if they batch by our cutoff, so our cutoff's 11 p.m., just because it needs to cycle through and get out to the car brand by midnight. Um, are we going to send an ACH out the next day without having a risk team look at it? I don't have a risk team that operates between that 11 and midnight window to review and hold any batches. So the biggest thing we had to do first was to set up some thresholds on every customer. What's your maximum batch? This is all based on the application. This is why the application is so
Hmm.
important. We tell agents all the time, like I just put in what I thought was their biggest ticket, or I just assumed,
Right.
the monthly volume or the, whatever. So we take what's on the application, underwrite the account, and say, okay, here's the thresholds. If we think your daily batch is going to be 10,000, I'm going to put a cap at 12 or 14. If you think the
Hmm.
average, the biggest ticket you're going to run is 2,000, I'm going to put a cap at 2,000. You know what I mean? So the
Right.
second they run that $5,000 ticket, we hold that transaction. We might release the rest of the batch automatically, but putting in those thresholds so we're
Hmm.
pulling out the things that we consider risky for that type of merchant. So
Right.
those are the biggest things that like we know could go wrong in funding is if I fund a transaction that's fraud, bad,
Right.
something that merchant should not really be, because once it's in their bank account, they can spend it just as fast as I put it. Like I can't yank it back any faster than
Right.
they can spend it.
Yeah, right. And even like ACH is its own kind of tricky thing in terms of trying to get money back. I actually had a situation recently where I lost a bunch of money on an ACH fraud thing, that happened where not I didn't even have a full understanding of kind of how the ACH thing works because there's no kind of standard chargeback and retrieval with that. It's like they can just
Yeah,
get the money. So the issue would be, yeah, it's like if you pay this money out to them. So to clarify, we're not saying that you have this risk that Visa might not give you the money. The risk is
what?
Visa might give you the money, you might give the merchant the money, and then you might need to pay the money back. That's the issue.
Right. Either Visa as a chargeback or
Right.
anything along those lines down the road, or
Right. Yeah.
those are the biggest ones. And for the merchants that we're a little scared on, we do 2-day funding. We give ourselves that next day
Hmm.
to review all the batches, mostly moto merchants, future delivery merchants.
Right.
If it's not I mean, if a doctor's office, we'll do next day funding, or it's, low
Hmm.
ticket,
Right.
that's still fine. But we want to basically say, okay, I want my risk team to have those transactions on Monday. Risk team has Tuesday to review everything that's been flagged,
Hmm.
and then they'll still receive their funds first thing Wednesday morning. And most of those motor merchants are are used to that funding timeline.
Right, right. And so, you know, when you think about the way you structure that, right? So we talked about the merchant application. I think most agents understand that concept of high ticket size and average monthly volume, right? And
Yeah.
so, what are the other things that you look for? What is your risk team looking at when they're looking at these batches? What are they looking for that are these red flags of like, oh, hold on a minute, we might not want to fund this one,
Yeah, I mean, there's literally a risk window. So we're TSYS
yeah,
on our back end. So our
right,
functional people who make all this actually happen is the TSYS platform. Even though it's us and our sponsor bank pulling the levers and pressing the buttons,
right.
we're using their wholesale
Their
FSB
rails,
platform.
yeah,
Yeah, so their rails, they've got these 12 flags, and you literally have a merchant pop up there, and they might have multiple flags. So some of the flags might be, hey, they've hit the same card more than twice. You know what
mm,
I mean? So if we see them hit the same card for $500 six times, that's a flag, because
right,
now if that's not one chargeback, that's six chargebacks
right,
potential.
right,
You can see one that you don't think about often is refunds without a corresponding authorization. So is
mm,
somebody trying to do friendly fraud on this merchant saying, oh, run a transaction. Oh, wait, I didn't want to do that. Can you give me a refund back to a prepaid card? And we've seen that fraud for some of our hotel clients where they check in, they
mm,
make a reservation, then they call and cancel. And basically they've used a stolen credit card for the auth, and now they're having the merchant refund it back to like a prepaid card. So we don't
right,
want us to let that batch go through. I can stop that fraud from happening if I catch that. So
right,
these are all these things that we can flag and look for. A lot of it's merchant focused, kind of things that we're trying to prevent because
right,
the other problem becomes like then merchants mad at us because we didn't catch it. You know what I mean? And
right,
then
right.
you lose the customer or they dispute the ACH that month or whatever it is.
Right, very interesting. So now, let's shift gears and talk about like same day and all these kind of things. So we see a lot of the stuff. Hey, I really want my merchant, they want their money immediately. I mean, they want their money the moment they run the transaction. So talk about that.
Yeah.
What's involved with a program like that? What are the additional variables you have to consider there?
Yeah, so something that we're working on launching now, we actually have an agent in Alaska. So it's a big issue for him. He's got a bunch of restaurants, daily discount, and we've got a few out west in California. So for them, 11 p.m. cutoff Eastern is really 8. And for Alaska, it's,
Mm,
5. So for them,
right,
they really have true, 24-hour funding situation. So for
right.
them, they can get an advantage of doing, if I did a 7 a.m. cutoff with an 8 a.m. funding,
Mm,
for retail merchants. Wow, they can go in the world, and again, their world's going to be 4 a.m. for West Coast and even a little closer to like
mm,
2 or 3, depending on where in Alaska they are. But
right,
it gives them the same,
right.
ability to go get those merchants that nobody else has. Now, the problem with
Yeah,
that is those are all after my midnight cutoff for Visa MasterCard. So then I have to float not only interchange every day, now I'm floating one day's worth of volume every single day.
right,
And so for us, we're still balancing, okay, Moto merchants, I'm holding funds for one day, so I have that sitting in the bank account. Can I float enough, 2 day holds
hmm,
to match up against my same day deposits to make sure I'm not overdrafting at the end of the day? The bank's cool with a 3 hour overdraft. They may are probably not cool with an end of day overdraft. So do I
interesting.
need to borrow funds to get that, or can I float that with the Moto 2 day holds? That's what we're balancing now. And then same thing. If I don't have to go negative with the deposits, it doesn't cost me anything. But the second we
Right.
start doing a bunch of those same day ones, now, okay, what am I charging essentially to let them borrow one day's worth of funding?
Right. How does that work? Is there, given a situation where you're like, man, I really wanted, go heavy on this like same day, right? I would imagine that sponsor banks have certain debt facilities for that type of thing. Is that a pretty common thing these days or no?
Surprisingly, no. It's surprising to see that they don't want you going negative because they look at ISOs like on a bin sponsorship.
Mm,
Um, there's actually a lot of money that floats and flows through. It's actually a big deposit account. So I don't think they look at us as a way to make money on floating negative. They look at ISOs and bin sponsorships as a way to kind of bump up their deposit volumes and then go
Right.
lend that somewhere else to a classic loan.
Right.
Um,
So you going negative for an entire day doesn't exactly sit well with them as a
no,
depositor.
no, it's part, it breaks their model. You know what I mean? So it really is
Mm,
not great. So, for us, I think the way we're going to try and fund it is saying, going to ISOs and agents and saying, look, as long as you have as much moto volume as you do same day volume,
mm,
your cost is nothing. If there's a variation of that, like you cover
right.
50% of your same day, we're only going to charge you a certain
Mm,
number of basis points. If it's everything you put on
right.
our book is all same day, you're going to
Right.
pay a lot more of a premium for doing that. But
Mm,
if we can find a way to balance it on both sides, I'm not going to
mm,
charge anything for same day because
right.
the ISO is actually, our agent or ISO or our bank
Mm.
partner is actually funding the same day.
Right. And so I guess maybe another way to think about this, when we look at other competitors that we've seen go to market with a, 1% or 50 basis point fee to like, hey, get your money right now. Basically, there's two components that I guess, right? So the first thing that you're doing is you're literally financing the money because you have to borrow X that money for a day, so
Yep.
there is a cost to capital for that. And again, because you're going to do that program over and over again, you have to borrow that money all the time because you're always,
In perpetuity. Yep.
yeah, you're always floating there. It's like you're borrowing one day's volume for that merchant basically forever.
For
So,
the rest of yeah. So it'll catch up on the weekends and weird stuff like that, but
right.
literally
Yeah.
for 20 days out of the month, I'm floating that volume.
Right. And so there's an aspect of, hey, charging for it so that you can cover the literally the interest on the money that you need in the account. And then the other piece of it, I would imagine, is also this kind of risk assessment, which other than automated, I mean, you can't do it because
Right.
you don't have anybody there. So,
Yeah. Well, and that'll be immediate. It'll be 7 to 8. It has to be automated. There's no way to even catch. It would
right.
just be
Of
whatever
course.
filter catches.
Right. Of
So if
course.
our risk filter catches it. So it's going to be definitely low risk merchants,
Right.
restaurants, retailers, medical,
Right.
and if they do something crazy or weird, the filter will grab it. But,
Right. So back to that example of the same card, six $500 transactions. That's not going to pay out same day because the TSYS filter is going to catch that.
it's going to grab it, and it's only going to grab those. You know what I mean? That's the best part about like, oh, I got funded everything minus this $6,000. So like our
Right.
filters grab out the bad apple out of the full batch. So
Yeah.
at least the merchant's not like fully being held up.
Right. Right. Interesting. What are the other things that you think agents and ISOs, like let's say you're a retail ISO and you're thinking about going wholesale and you're like, oh yeah, we could do this funding thing. I think most of them are probably thinking, oh wow, this sounds scary. But let's say the
Yeah,
ones that say, yeah, I want to do this. What are the other things that they need to know about funding that you want to share?
yeah. The things that you don't realize that are kind of out there. That's the kind of going wholesale that we didn't realize is like you got the MasterCard. Do a match check, the match list, you know what I mean, the risk. Well, MasterCard charges you to have access to the match list, but you also have to check the match list. So there are
Right.
things like that. When you go wholesale, you're going, well, wait a minute, this is this requirement, but you're going to charge me to use the list that you're requiring me to use?
Right. Right.
That's $3,000 a year right there
A
just
lot of hidden
on
cost.
yeah. So if you're thinking about going wholesale, no matter how much people tell you about all the cost of it, it's going to be. I always tell people, like, look, you need to be ready to put out $200,000 a year, just out of the bat. Now you can get it back over time and you can get controls and create
Right.
efficiencies and do all these things, but
Right. But you have to have
be
enough, you have to
ready
have
to
enough
just dump.
volume. You have to have enough
Yeah.
volume so that the little shavings of basis points and per items and customer experiences that you improve on are enough to
Yeah.
justify that 200,000 a year kind of fixed cost, not to mention the incremental cost of risk and all those other compliance and things that maybe you
Yeah.
weren't doing before. So,
Yeah, and mathematically, I mean, we are just now hitting that point at the end of year three in
right.
which we've justified it. So if we had stayed retail
Mm,
the last 2 years, we would have been better off staying retail. We have finally hit that critical mass in
right.
year three where it's like, wow, we're kind of at a break even. Now it's the same as if we were retail. Like,
Mm,
and the hard part is we've only had one major. We have about a $19,000 loss from one fraudulent merchant.
mm,
We also haven't been hit with a major loss yet either. So like
right.
that's the other big piece. And everybody freaks out about the losses. They don't actually understand all the other costs. You got
Yeah.
to have an underwriter or a risk person. You got to
Right.
have a pretty smart person running your levers and buttons.
Yeah,
You know what I mean? You
exactly.
can't just send it in,
Hope
get a
for the
bar
best.
sheet, and put it in a terminal. Like
Right.
you got to tell it who to fund, how fast,
Yeah.
and which thresholds to put in.
Right.
Yeah.
Let me ask you a kind of an off the wall question. So, what are your thoughts on the payback model? So when you think about, because I think for a lot of people, I did a lot of research on this lately, and I was kind of fascinated by it. But it's like most people, what you just described, the fund, oh, we do the funding and all that, they would be like, oh, so that sounds just like a payback, but it's not. Why is it
Right.
not? Or what are your thoughts on the payback model?
Yeah, the payback model is pretty cool. So you're a merchant of record, you know what I mean? Which is kind of a scary word nowadays. A lot of the banks have been kind of anti against that merchant
Mm,
of record because you really don't know which merchants are in that merchant of record file unless you dive into like that
right,
PayFax reporting. It
right.
doesn't report up to MasterCard and Visa the way you think it does. So, the PayFac is just kind of saying we have one merchant and you're funding it out and you're pulling it back. Now, where I see PayFacs do well, it's like the micro merchants. You don't have the account on file, you don't have the IRS, reporting, or you can do things like that that are unique. But where it becomes an issue is like, I've seen PayFacs go, oh, we don't have a way to respond to Amex chargebacks because you're responding to a chargeback against our merchant of record, not
Hmm.
the PayFac piece. And so you see some of these things where it's like, wow, it's PayFacs are perfect for those small, unique merchants, and they're growing up to be a real merchant, is the way I kind of look at it.
Hmm.
And I think that's the way Visa, MasterCard kind of designed it, the squares, the stripes and stuff like that. But at some point they want you to grow into a real merchant account
Hmm.
because and you need to, because then you're like, wow, I have to be able to do all these things. I mean, you can see with the bigger PayFacs, the Shopify's and like if you have a chargeback, you can't do arbitration. Can't. It's like, well, what do you mean? Like, if I have a merchant account, I can do it. No, you're with Shopify, you're on our master merchant, you can respond. We'll push it up the stream, but we're not going to actually help you win it.
Right,
So
right,
those are things you balance. And the same thing, Shopify is great. The technology is amazing.
right.
So you play with that. What I lose in ability to run my merchant, I
Mhm.
gain with technology and funding timelines. Like it's a merchant decision.
Yeah, interesting. What do you see as the what do you see as the big benefits of the payback model? So like, when you look at like let's say Square, which Square has kind of, I mean, their average merchant volume, new merchants is
It,
going up. I
yeah.
mean, they're signing some serious accounts and they're all on this payback model, right? What
Yep.
are the advantages? In other words, in your mind, why is Square a payback versus a wholesale ISO?
Yeah. It's a hard question for Square. I can tell you why Stripe is. Let's start
Yeah,
with
let's do
Stripe.
that
It's a
one.
little
Yeah.
easier because Stripe is international. They want to move money across multiple places. I can charge in Costa Rica and it settles in the US. And
Hmm.
I want to make these international funds move. And I want to make money on moving the money and then not actually get charged it. So they're going to leave the money in Costa Rica, but they're going to charge you to move it across the border because
Hmm.
they already have the money in the US. And so now they've made 3 to 5% on that. And you know what I
Right.
mean? So you have PayFac situations like that where Stripe is that, or they're the back end of companies that want to do similar things. So cross border is a
Big one. And
PayFac
and to clarify,
necessary.
it's clarified not only is it making money, but the fact is they only need to create like this one kind of merchant account in this one country, and then they can
Yep.
process for all the merchants in that country under their one merchant account.
Under the one merchant, or even if it's Kyle has a web store and he sells one widget to one person in Costa Rica, they just goes up, and then again, they're settling it in the US.
Hmm.
So again, the money stays in their Costa Rica account, but then they can give me money from their US account
Hmm.
minus what the cost plus profits.
Right.
It's great. So international is where PayFac wins every time. A
Hmm.
classic merchant account, international cross-border is going to lose every time. You're going to have to charge the cross-border fee, convert the funds, do all those things. Stripe wins at that every day. Splitting out the transaction. That's the other place at which, again, this is not a Square situation, but on the Stripe situation.
Hmm.
Hey, I have a ticketing company. I want to charge, whatever, $14 for the ticket. I want to give $1 to the ticket software. They can take that same authorization and split the funds out.
Hmm.
Can't do that on a classic merchant account. So those are where PayFacs win. It's
Hmm.
on those unique situations where money needs to move in ways that you can't on a classic merchant account.
Right.
Um,
What would you
Square
say?
doesn't really do any of that kind of stuff. They're
Yeah.
literally just going micro merchant, grow it out.
Right. And what would you say to the underwriting friction piece of it, right? Which I know is it's a big part of it as well as far as Square, especially in saying like, oh, we just want this frictionless thing. They go in, they sign up, they get go.
Yeah.
How much of that is a kind of fundamental problem that is unsolvable for a wholesale ISO versus how much of it is just like bad processes or bad relationships with the sponsor banks, or you know what I mean? Like how much of that is solvable versus not?
Yeah, so we have auto approval situations. So we have an underwriting system that will do all the classic underwriting. You know what I mean? So,
Hmm.
for certain softwares we're working with, we work with a bed and breakfast software working on this now and some other softwares that
Hmm.
we know the customer. The customer can't process transactions unless they're in the software.
Hmm.
The software doesn't just turn on instantly to cause fraud. You're going to have to put your rooms in and your
Right. Right.
pictures and, like, you know what I mean? So we know there's a
Yeah.
there's a timeline. So
Right.
we don't have to worry. We can turn off frictionless because we can even ghost underwrite in the background while we know they're turning
Mm.
on. But we can literally have a system that does everything. Verify the ID, do the,
Hmm.
corporate code, pull the credit, do the whatever. And all we got to do is say, if it's above this credit score,
Hmm.
it gets a green score or a yellow score or a red score. And so
Right.
what we've
Right.
been able to do on our underwriting side is go anything above a 90 score, approve it. You know
Right.
what I mean?
Right.
We approve it. We do what Stripe does. You turn funding off for that next day. You know what I
Hmm.
mean? And then you can let the merchant ride and run. And then you have 24 to 48 hours before they really start ramping up
Right.
to really dive in and make sure
Look
everything
at it
looks
and
great, whatever. But you can still get that frictionless, approach.
right.
I think where frictionless becomes a problem is for ISVs that don't realize that the contract they assigned to be like, oh, I'm an ISV of Stripe or
Hmm.
another PayFact, is that they'll do the underwriting for you, they'll do the risk for you, but the actual losses fall back on the ISV.
Right.
And there's
Exactly.
been so many situations in which that's been burned. You're like,
Hmm.
but it's frictionless. Like, yes, I don't care if it's frictionless because
Right.
you're liable as the ISV.
Right.
That's
Right.
insane.
So one last question I'll ask you. This has been I always enjoy our conversations because we get so far in the weeds. So
Yeah.
even farther. So help the audience understand though when you say, okay, we have this auto approval, right? What role does the sponsor bank play in that? In other words, as a wholesale ISO, what degree of autonomy do you have to create that versus
Yeah.
is this a negotiation with the sponsor bank to say, hey, here's the criteria under which we want to do auto approval, but the sponsor banks, you know what I mean? Help us understand that
Yeah.
relationship.
So the sponsor bank is an interesting relationship. So we've got a great one. The sponsor bank is Chesapeake Bank. They're a community bank. I think they're about 1.5 billion in assets, so small compared to like a
Yeah.
America or one of the other big guys.
Right.
Definitely no
Esquire,
Wells
whatever. Right.
Fargo. You know what I mean? So we talk to them. We're talking to. I can talk to the division. Like there's
Right.
5 or 6 people in their payments bin division. Like I know them
Right.
all. So we can have really good conversations. So
Hmm.
what usually happens is we set up parameters around certain situations and certain merchants, and we can make decisions based off of that.
Hmm.
Their biggest thing is, we got to put money up. We have money in a reserve with them. They're saying, okay, Kyle, let's throw a worst case scenario at your book. What are your biggest transactions? And they went sideways. Could you cover it? Okay, great. What about the merchants? What are the
Hmm.
chargeback ratios? And so the good part about us is it's all community banking or ISV. I
Right.
don't have, we don't really have bad paper on our
Right.
book, so it's not
Right.
a big issue. Um, and then even our agent model, our agent channel, we're very selective about our agents and our ISOs, knowing that they're pre-underwriting. It's not a Google,
Right. Right.
search kind of thing. So yes, the bank makes a big piece of it, but as long as you as the ISO can build the trust with them that you do what you're supposed to do in the due diligence, when you do have a fraudulent account, which we did, it was from a trusted agent of ours, and it was a woodworking shop that was doing $300 a day and 300 to $500, and it wasn't, again, it was something that would have stayed all below our radar even today.
Right.
We keep looking back at it going, but we have caught that? No, still wouldn't have caught that one.
Right.
But as long as
Right.
you're creating systems that say, hey, you're going to be trustworthy as an ISO,
Hmm.
the bank will leave you alone. Now, every so often something will pop up. They're going, hey, this merchant's got a weird refund policy on their website, or this,
Right.
there are things
Right.
that will flag, and
Right.
we can still let the merchant operate and we can resolve those flags in the rears. You know what I mean? So
Right.
it's not like at the end of the day situation, oh, shut that merchant down, put them on pause. It's
Right.
like, no, let's have them adjust their refund policy. And if they're not willing to, then they can go somewhere else. But if they're willing
Right.
to, we
Right.
just shift it and keep moving.
Yeah, I love it. So that was a great explanation. So it's like the sponsor bank technically does have oversight over this, and they can certainly come and say no. And sometimes you have to have different sponsor banks for that reason. But
Yeah.
as the ISO, as long as what they want to see is that you're doing what you're supposed to do. You're doing the due diligence. It's a real underwriting process. And like you mentioned, they also, depending on the structure of your portfolio and what types of accounts, they're going to want some reserve from you to make sure that if things go sideways, they're not going to be the ones stuck holding the bag. So,
Yeah. And I
yeah.
think a lot of times the sponsor banks get a bad rap because the bigger they get, the more it's like you just have to fit in these boxes
Right. Right.
and there's no moving in or out of the box.
Right.
I think with community banking, we see all kinds of weird. We have a perfume merchant in the middle of nowhere, Maryland, doing $1 million a month, like in a
Right.
warehouse that doesn't have signage. Like, I mean, it's just wild.
Yeah.
But because the bank knows the customer, that's a shareholder of that bank.
Right.
I mean, we're able to just grab that account and say, yeah, it's weird, but
But it
they're
makes
one of the
sense, and we're
biggest
going to do it.
big perfume companies that are in the
Right.
US.
Right.
You know
Right.
what I mean? So as long as
Yeah.
that's where the banking relationship always helps. You know what I mean? We
Right.
can
Right.
really
Sure.
lean on our bank
Mm.
partners to say, well, yeah, we have bank statements. Yeah, we did loans
Right.
for them. Yeah, we did.
Right.
Yeah. So it's a little easier.
Well, Kyle, before I let you go today, and I know we could, keep talking for another hour about all this, but before I let you go, share with our audience where should they go to learn more and tell them a little bit about kind of MPI and what kind of partnerships you're looking for these days.
Sure. Yeah. So, like I said, we're about to launch that new funding program. So if you're on the West Coast or you're looking for same day funding, we'll have a conversation about a balanced portfolio. Love to have a conversation with you. Or if you're in the banking space and you're tired of underwriting and risk departments that don't understand those relationships, we'd be a great kind of ISO for you guys. My email is kmorgan@mpiprocessing.com. You can find me on LinkedIn. Kyle Morgan is under Mercantile Processing Inc. And I'd be happy to have a conversation.
Awesome. Kyle, thanks so much. Always appreciate you coming on here sharing your insights with us.
Thanks, James.
Google, it seems, wants to get deeper into payments. It plans to incorporate remittance services into its digital wallet, and it has teamed up with several remittance providers, such as Ria Money Transfer and Wise, to provide remittance services through the wallet. 50 Ria Money Services, Money Transfer, has over 55,000 locations in the U.S. I did not
Mm.
realize that. It must
Wow, it's a lot.
yeah, it really is. And I think it's pretty much located in the Southwest because they
Okay.
mostly deal with Latin American countries.
Okay.
Okay. Wise is a money transfer service that counts nearly 15 million customers in 80 countries.
And so give our audience a flavor of like why, like what would people be using that for? So I use
So
I
this
go onto
is
my phone and like, yeah.
right. You go to your phone and you're from Colombia and
Mm,
you're working in New Mexico.
right.
So the remittance services are the money transfers that you remit back home.
Right. Right.
Okay, or I've used it here like years ago. My brother got stuck in Ohio. Ran out of
Right.
money
Right.
and didn't needed to get home. Didn't have money for gas,
Right.
so I could send him through Western Union,
Union.
which is
Right. I was about to
also a
say,
remittance service.
right. And
That's
so I think anybody that's ever experienced that knows what a pain in the neck it is. And so it sounds like
oh
Google is trying to make this a lot easier. You can do it from your
right.
phone and you can send somebody
Yeah,
money
I
through
mean,
this. Yeah.
normally you have to go like I remember I still see it. I'll go over to the grocery store and there's people waiting online to send money off to who knows
Right.
where. And then you have to fill out these little forms by hand.
Yes.
So to be
Pain in
able
the
to do
neck.
it all as part of your Google Wallet is a huge,
Yeah, that would be really nice. Yeah.
yeah. So initially at least Google Pay customers will only be able to send remittances to India, Brazil, Mexico, and the Philippines.
Okay.
But they're opening up more. They'll be opening up more markets, as they go on.
Sure.
The other thing that Google wants to do is incorporate buy now, pay later options into the autofill function on its
Mm,
Chrome browser.
okay.
For that, it's expanding its relationship with the BNPL firm Klarna.
Oh, sure. Yep.
So, Payments Dive, which is an online news site, quotes several industry experts who point to the need for Google. Why one of the reasons Google is doing this is that it needs to deepen its relationship with consumers and merchants with an eye towards enhancing the utility
Mm,
of its, and getting deeper into payments because OpenAI is already readying a web browser to compete with Chrome.
Right.
And
Right.
OpenAI being, the big
Yep.
AI
Yep.
company. So Google, you know, is trying to say, it has to stay one step ahead. And
Right.
payment seems to be the one area where it's always found more ways to do things.
Sure. Yeah, absolutely. Okay. Very interesting. We'll see how that goes. I mean, yeah, if they open up a lot of countries, I do wonder. It's like, to me, that almost seems like an innovation where, you know, do we really need, isn't the, Bitcoin, or it seems like crypto would actually be a better medium of exchange for this use case, but,
It
you know,
would, but I think you're also talking about a sector of the economy that is not necessarily that savvy.
right. Sure. Got it.
You
Right.
know, I mean, I see crypto, for gig workers, for example,
Right. Right.
right? That's a
Right.
great way to pay your gig
Yeah,
workers,
but people who maybe are here working an agricultural job or something like that, and they're trying to
right?
send money back home, they might
Right.
want something a little more trustworthy that they're used to. And yeah, sure, I could see that. Yeah, that
Yeah,
makes
yeah.
sense. Okay.
And there is I do see, I see a socioeconomic, um, uh,
Component
uh,
there.
yeah,
Sure. Yeah.
for some folks that are well heeled, yeah, let's do the crypto,
Right.
But for other people that are more afraid that crypto is going to lose value, I mean, look what has happened to Bitcoin just in the last couple.
Right. Right.
Right? I mean,
Yeah. Sure. Okay.
I
Interesting.
yeah. So anyway, so next up, a report on gift cards.
Okay.
2025 is shaping up to be a really good year for gift card sales. A new report from the Bank of America and Strawhecker Group shows increasing gift card purchasing over the past year. 81% of consumers they surveyed in 2024 purchased gift cards, which was a 6% increase over 2023.
Wow. Okay.
And that's both physical and digital cards
Right.
are being bought with greater frequency. I know I'm not necessarily representative of the buying public, but I got to tell you, I love gift cards and I use them for myself.
Mm-hmm. Right.
Like I have this grocery store that gives me, points towards my gas
Right.
when I
Right.
buy gift cards. So, I needed to put a dishwasher in the apartment that I have.
Yeah.
You know, I got enough gift cards that I got was able to fill up my monster truck, which has a 30-gallon tank for
Right.
free.
Right.
30 gallons of gas for free. That was a
That's pretty
nice
good.
little. I was at
Right.
Home Depot. I picked out the dishwasher. I said, "Excuse me, I have to go to the grocery store. I'll be right back."
Right. Right.
And a guy knew exactly what I was doing. He's like,
Yeah.
"Yeah, I'd be doing that too." So,
Huh.
anyway, when they were queried about their gift card purchasing plans for 2025, 23% of consumers said they plan to spend more on gift cards this year than they did last year.
Right.
So last year they went up 6%. It would not be hard for me to expect them to go up 5 or 6% this year as well.
Mm. Interesting.
Also worth noting, 57% of consumers, excuse me, say that gift cards prompt them to or inspire them to try new places. Whether that
Mm.
be new restaurants or new
Of course.
merchants.
Yeah.
So,
Well, that's always been the big driving force, I think, for gift cards is that it's a way. I mean, I remember I probably talked about it before on the podcast, but I remember the first guy that I understood gift cards was this guy named Larry Rosen, I think it was. Anyway, he owns this chain of pizza shops out
right,
here. And every year, so his pizza shops are all strategically located near a college, like a college
right,
campus.
right,
And so he would every year he would go to the college campus and he would donate like I don't even like 1,000 of these $5 gift cards or something.
right.
And then he would say, "Hey, you can go sell these for $5 or whatever, and use the money for the college." Is great. Well, then what happened is everybody would come to use this $5 gift card that all
Yes.
spend $50, and he would get all these brand new customers that had never been there before, but they got a gift card, so they wanted to come use it. And he kind of built his whole business on that.
It's interesting that you say that because I have this young man who does work for me around the property, but who just got a job with a new pizza joint. And so I went there one day just to check out the place, and there wasn't very much business. And I said, you know what you guys need to do. And I
Yeah.
used that example of
Yeah.
what,
Yeah.
I said, my friend James, had a client that he did that with, and, he built a whole business around it.
Right.
So I said, and what's interesting is this guy, his pizza shop is like 3 blocks away from that city's schools,
Right. Right.
the high school, the middle school, and the elementary
All
school
right there. Yeah. So
are
he could
all
go
right
do
there.
that and just donate gift cards and yeah.
Give them out to the kids as the
Right.
principal's reward for getting on the honor
Hmm.
society or whatever, right?
Yeah. Well, and it's funny too because it's a cool way to do that because when you think about it, the average spend at a pizza shop is probably $40, I would imagine these days,
Probably
at
right.
least, if not a little higher. So you're like, okay, really, if you're giving out $5 gift cards, what you're really giving is this very small discount. It's like a 12%
Right.
coupon is really what it is, but the school gets a chance to make some money off of it, so it works really well.
And you're getting people in who you wouldn't never
Right.
necessarily get in. So yeah,
Exactly. A lot better than Groupon, as far as
yeah,
they take 30%, I think, so it's a lot better.
yeah, exactly. It's a lot cheaper than
Yeah.
Groupon. So the next up, I wanted to talk about debanking. Now, people don't might not understand what debanking is. So it's also called de-risking, but it's basically the practice of closing or refusing to open accounts for individuals or organizations that are deemed too high risk.
Mm.
There was a thing a few years ago. I don't know if you remember Operation Choke Point.
I don't remember that, huh?
It might have been, you know, more than 10 years ago. So when
Sure,
it was
sure.
still, but Operation Choke Point, regulators were looking askance at banks that provided payment processing and other services to businesses like gun shops, payday lenders,
Okay.
and more recently, debanking has been an issue with cryptocurrencies.
Okay.
Okay. So the president signed an executive order earlier this month that prohibits financial institutions from engaging in any politicized or unlawful debanking.
Hmm. Okay.
And it imposes numerous requirements on regulators and the Small Business Administration to ensure that banks and credit unions are not debanking.
Hmm.
And the reason I bring this up is that, of course, I'm a news junkie, so I read
Right.
everything that comes over, right?
Hmm.
And I read all these executive orders out of the White House. I mean, not all of them, but I mean, at least
Right.
check them
Right.
out. And it's very rare. I don't think I've ever seen an executive order out of the White House that specifically cited payment processing,
Hmm.
and which this one did. So,
Huh.
to me, that means it, and they did mention Operation Choke Point, so they obviously have that
Hmm.
in their mind.
Right.
And so I thought it was really interesting. I was doing some research on another project, and I went over to the Office of Comptroller of the Currency, which regulates the big national banks.
Hmm.
And I was looking at its handbook for examiners, and I noticed they had with big red marker had had uh, had etched out high risk businesses.
Hmm.
How to look at high risk businesses. Obviously, you
Right.
know,
Right.
so they, that's under the for under the executive order, regulators and SBA have to identify instances of big bank of debanking, including businesses that were denied payment processing services. That
Oh,
was in there.
wow.
Yeah,
Interesting. Now,
yeah.
is that going to have an impact on kind of the CBD that's
Well, that was my question too. And it's no, the reason it may on CBD, but it won't on some of the other cannabis stuff
okay,
because
like dispensaries and things like that?
dispensaries and stuff like that. But it probably will have an impact on the CBD. Right now you can people. I see gas stations selling CBD oils and stuff
Hmm.
like that.
Right.
That would be in the smoke shops. Some banks aren't gonna want to underwrite smoke shops. Well, they have to at least look at it
Hmm.
under
Interesting.
this. They have to at least consider it. They can't say no. Don't bring
Hmm.
us any smoke shops.
Wow, that's very interesting. That's going to have a big impact on underwriting. That's actually really interesting.
I think
So,
so too. Yeah, and the other thing they're going to have to do is notify and provide renewed options to any clients or prospective clients that were denied access to payment processing or other services because of politicized or unlawful debanking actions.
hmm.
Now,
So if
politicized, I
I
mean Go ahead. I'm sorry.
No, I was going to say, so to clarify this, if I'm understanding correctly, it sounds like what we're saying is there are certain businesses who are still operating in a way where there's actually laws about their ability to bank, such as dispensaries and things of that nature.
Right.
Then there are other businesses who have legitimate financial risk components to their business.
Right.
So these could be any number of things, but you think about maybe a furniture store or an
Right.
online furniture store. Well, they have $1,000 average ticket and a high chargeback rate, and so in that case, a bank could say we don't want that because we don't want the financial risk.
Correct.
Then you could have other businesses like, let's say, a retail gun shop where there really isn't a big financial risk, but a bank says, well, I don't really want to have anything to do with guns. And so,
Right.
from a political perspective or whatever, I don't want to have anything to do with that. This
Right.
executive order is saying, hey, in that case, that's almost discriminatory towards that business
Exactly.
because you're not basing this on a financial decision. You're basing this on, I don't want to be associated,
Right.
with that business type. Could also, I would imagine, have to do with maybe even some nightclubs or adult entertainment type stuff. So the various things like that.
Or payday lenders would be
Payday lenders,
another thing,
sure.
because a lot of people think that that's sort of like loan sharks. It's
Yeah,
not.
yeah.
But
Right.
I thought of this. One of the reasons when I was reading this, I thought of your full stack payments,
Hmm.
because I know you have a module for gun shops, right?
Yes. Yeah, we do.
And in the old days under Operation Choke Point, you wouldn't have been able to do that.
Right. Right.
You'd be really hard pressed to find a bank that would
Hmm.
underwrite that. Now
Right.
they
Now
can,
it's not hard to find a bank to underwrite it, but there definitely are a lot of hoops you have to jump through. But that's just to make sure there's compliance as far as all the different licenses are needed and things like
right.
that. So
Right.
yeah, that's
But
very
so
interesting though.
anyway, now it's like an open market, so to speak.
Wow, very cool. Huh?
Yeah, I thought that was a cool one.
Yeah, interesting.
And then finally, I have a report out of JD Power
Okay.
um, that found reveals surcharging is really catching on with small businesses.
Hmm.
Better than a third of the nearly 4,000 small business owners surveyed assess by JD Power assess surcharges on credit card transactions.
Hmm.
And they found that it's especially popular with newer and smaller merchants.
Yeah. Sure.
And I can think, that kind of goes along with stuff that we've talked about in the
Yeah.
past.
Right.
The newer merchants aren't like confined by that old mindset of surcharging is bad.
Right. Exactly.
I mean, right
Hmm.
now, what it's like 48 states, I believe it's now totally legal in
Right. Exactly.
with some conditions, but
Yeah.
and
Hmm.
you can't exceed, for example, it can't exceed the merchant's actual cost, or they might
Right.
put a cap on it.
Right.
Um, I also am reminded of the fact that New York passed a law last year that excuse me, requires merchants to either display the higher credit card price alongside the standard price,
Hmm.
or some kind of unified price that
Right. No, there's no calculation at the counter.
yeah,
Yeah.
yeah.
Yeah,
So
if you have to calculate the price, then that, so you can't just say there's a percentage differential or whatever. There even
right
even a percentage surcharge isn't acceptable in New York because they have to know what they're going to pay before they go to pay it.
before they got to pay it, exactly. So,
Right. Hmm.
but still, and in New York is a big market, but still,
Yeah.
a third of merchants. I don't think
Yeah.
we would have seen that a few years ago.
Well, what's funny? I'd be willing to bet anything that in that study, if you segmented off just the merchants from New York, I'd bet that they were at 40% or higher.
Oh, I wouldn't doubt it in the least.
It's huge in New York, which is funny because it's one of the only states where it's absolutely illegal. And
Right,
yet, meaning, there's no calculation. So no matter what, it could be cash. Even, well, I guess cash discounting, I guess that would be okay because you're doing a discount to a lower price. But as far as
right,
like, yeah, again, I don't know though, actually, I'm not sure about that. But, but definitely what we would consider a compliant surcharge where you add a percentage to only credit, that's definitely in violation of that law in New York. And dual pricing would probably be as well, unless you're going to display it on the shelf. So
right.
it's funny that one, but that state it probably has more surcharging than
Probably
anybody else.
has more, and it's part of the size of the state.
Right, right. It is, but it's also just kind of caught fire in New York, and there's a lot of ISOs and agents that push it. So,
Yeah, yeah,
but
exactly,
yeah,
exactly.
well, yeah,
Well, that's it for this week, James.
yeah, very interesting. So thanks so much, Patty. Really appreciate you jumping in and providing us these insights.
Oh, hey, it's insightful. I learn every time I do this. There's an old expression: journalism is a practice of conducting your education in public while getting paid for it.
That's great. I love it. Good stuff.